And on this point of the industry moving elsewhere effectively, how much appetite is there, would you say, in some of these jurisdictions to be the first mover? I mean, we hear this phrase first mover advantage all the time. More often than not, over the last few months particularly, I've been hearing second mover advantage. That is to say, let the first mover make mistakes, let the Bahamas get this wrong effectively, and then someone else will come in and pick up the pieces. So how appealing, I would say, is that idea of getting this first mover advantage today, perhaps again in comparison to last year?
Well, I think if the first movers were various island regulators, that was a false move, right? Very simply, you're not going to have island-led regulation and jurisdiction of this new asset class. Always that looks a little bit like arbitrage. So I think, certainly if you look at the Middle East, they're looking for what's next. Where can they be significant? Where can they be relevant? So I'd say at the moment they have a healthy appetite to be the hub. I don't know if they have all the plumbing. I don't know if they have the infrastructure. I don't know if they have the institutions, and I don't know if they have the capital to do that, but they want it. Singapore is becoming the Asian hub of all capital markets with the decline of Hong Kong. But again, things as simple as talent pools, time zone might make that difficult. But I think, look, they're all trying much harder than certainly the United States is right now, and potentially harder than the United Kingdom. So let's see. What surprises me, though, is that they haven't spent, it's a generalization, but certainly in the Middle East, they haven't spent that much time at looking at the framework. I mean, the United States overall capital market regulatory framework is sound, it's solid, it's stood the test of times for over 90 years, the Securities Act and the Banking Act 1933 and 1934. So it's well thought out. By the way, the framework in the United Kingdom is similar. Over there, a couple of the keys they have are separation of powers, segregation of duties. Many of the newcomers I speak to are still talking about exchanges and brokers being operated under the same license. That can't happen. They're separated under MiFID. They're separated in the United States for good reason. And you saw the collapse was because of that lack of separation and segregation in November in the Bahamas. So I think if those behemoths of regulatory frameworks, starting with the United States, that can't get it right, then everyone else around the world would do well to follow what they do in traditional finance.